Louise Cooper is market analyst at BGC Partners. Louise, great to have you on the show. Now, talk to me a little bit about all this nervousness out there, because it does seem that actually markets are spooked by what they're hearing from Germany, by Italy. The European debt crisis is at the forefront again.
Absolutely. I mean, to start with, the US market sold off after the close, after European close on Friday. So to a certain extent, we are paying a little bit of catch-up. And, of course, the US is closed as well today. So part of it is catch-up, and part of it is just the dire news we're getting about the Eurozone debt crisis. And I looked at the 10-year yield graphs for both Greek and Italian sovereign debt, and both of them show quite a substantial increase in the costs of issuing that debt, of the yield of those debts. Yeah. So it really shows us quite strongly the markets are very nervous about Greece and Italy and their ability to get control of their debt. Interestingly enough, Ireland has actually stayed at record recent lows, actually. So the markets are very convinced that Ireland's doing the right thing, but not Greece and not Italy.
Yeah, the focus has really shifted and really zeroed in, especially on Italy. Louise, when is this volatility going to stop? Are we going to see again a couple of weeks of a lot of nervousness until we get a clearer picture of the austerity package, and on whether, I guess, the Germans will actually vote for this beefed up EFSF package?
Well, at the moment, the ECB is taking on a role that it just doesn't want to take on. It did this deal with Italy that it would buy their debt it provided Italy did an austerity package, but the austerity package keeps slipping and slipping and slipping. So, will we see the ECB stop buying Italian debt? Highly unlikely, but the EFSF doesn't come into being until potentially the end of September, and with Merkel's position domestically deteriorating, then who knows what's going to happen, because at the end of the day, it's really only Germany with the financial firepower to sort out the Eurozone debt crisis if it chooses to do so.
Yeah, of course, they're the only ones with the cash. Now, Louise, in terms of what we're seeing, industry groups, utilities a little bit expensive, basic resources, in terms of the PE ratios, they actually seem quite cheap at the moment.
Well, I find it quite interesting that, it tells you an awful lot about markets when investors are buying utilities. And I think that tells you everything you need to know. On Friday, the utilities in the States performed really well. And I think, when I first came into the market 2 decades ago, 20 years ago, utilities used to trade on sort of 50, 60% PE relatives, half the market PE. Well, they don't do that anymore. Some of them trade at market premiums. And I think, again, that indicates the level of fear by investors.
And what about some of the banking stocks? We were just hearing from the Deutsche Bank CEO saying he's really concerned because what he's seeing on the markets, brings him back to 2008. I want to see just like, uh-oh.
Yeah, we're starting to see, this 2-day conference in Frankfurt, banks in transition. To be honest, there's not a lot of good news out there for banks. But yeah, starting to see what Joseph Ackermann's saying. The market conditions remind him of autumn 2008. That's not good. Great. That's not good in any way, shape or form. When I speak to the brokers here at BGC, they all tell me, look, Louise, it's bad. Banks are having trouble funding themselves. We know that. They're having trouble issuing bonds. We now hear from the FT today that money market funds in America are very reluctant, or becoming more and more reluctant, to lend banks short-term money. So we know all that. But they say to me, it's okay, Louise, it's not as bad as Lehman's. Well, apparently Joseph Ackermann thinks differently, so I think that's deeply worrying.
And Louise, very quickly on to consumer goods and services sector, they actually look quite expensive, again, if we look at that PE ratio.
Yes, it's quite interesting. This is going to be a big week. Here in the UK, we've got results from Morrison's. We've also got some numbers from Argos and a couple of other retailers. We know that consumers are being crushed. I think, I was shopping for a new pair of running shoes, Francine, on Saturday, and bizarrely, my local running shoe shop had sales of like 70% closing down sale. And I said, is your business really bad? And he said, well, it's not great, but bizarrely, it's all to do with the rental payment coming up in September. And I think that, as we all know, it's an issue we talked about many times, retailers in the UK paying their quarterly rental payments in September, that could cause a few worries as well.
Yeah, I've seen sales out there as well. Louise, thank you. Louise
Cheap
Cooper.
Running shoes.
Cheap running shoes, there you go. Thank you so much, Louise Cooper there from BGC.